So stop waiting on investing. Stop waiting for the right moment. Stop waiting for the right amount of information. You have the information. The information is at your fingertips. All you have to do is press the button and start investing. This video is for the brand new investor, a person that has never invested into anything in their lives, a person that's never invested in the stock market, a person that has no idea how to invest in the stock market. This video is for you. So I recently got a comment on one of my videos saying, I'm a beginner investor. What do I invest in and how do I invest? This is 2025 and we have access to so much information that there should be no question of how to invest. There should be no question of where should you invest. There should be no question of what kind of investments I should put my money into. We have access to so much information, so much social media, Google, ChatGPT. You can literally ask these questions and find your answer in a matter of minutes. I'm going to break this down of how you can invest, where you should invest, and most importantly, why you should invest. So first, let's talk about why you should invest. So you can prepare for your financial future. So you can prepare yourself for when you turn 50, 60, 70, to have money so you don't have to work your entire life. Or if you want to retire early, then you should definitely start investing as soon as possible and invest a lot of money so you don't have to work for the rest of your life. That is the point of investing. Investing is so you can have money later down the road because we're not going to all be working. So I'm investing now for my future so that when I retire at 50 years old, because that's when I plan on retiring, I can then have money coming in, basically passive income, because I worked all this time. I put in the active work right now to have passive income in the future. So that's why you should invest. So you can invest for your future. So you're not working your entire life. Unless you want to work, then don't invest. If you want to work your entire life, then just live and don't worry about investing. But me, I don't plan on working my entire life. I plan on retiring at 50 or earlier. So I'm investing now so I can have that money in the future. Now, how do you invest? So I invest into the stock market. The platform I use to invest in the stock market is Fidelity. So you can go to Google, type in Fidelity. You can invest into two different accounts, a brokerage account and a Roth IRA. I'm not the most knowledgeable when it comes to investing. I just know where to put my money and I know why I put it there. So with the brokerage account, put as much money in there as you want. With the Roth IRA, you could put up to $7,000 for 2025 into your Roth IRA. That money goes tax-free and you can pull it out tax-free once you're 59 and a half. If you put $200 into your Roth IRA and it grows to be $200,000 when you turn 59 and a half, you can pull out $200,000 without taxes or penalties. Now, the brokerage account is different because you're taxed when you pull that money out, or you can invest in your 401k, but I'm more thinking about the Fidelity. 401k is your employer-sponsored retirement plan, which you can invest in that, which is pre-tax money. But I'm talking more about the extra stuff, investing into Fidelity, investing into your Roth IRA and your brokerage account. So for this example, we're just going to talk about the Roth IRA because it's super simple. So with the Roth IRA, you can pull out your contributions tax-free, penalty-free as well. So if you put $7,000 into your Roth IRA and it grows, whatever, next year, you can pull out, hypothetically speaking, you can pull out $7,000 tax-free, as long as you're pulling out the contributions, so what you put in. Now that you know where you can invest into Fidelity, and you can invest into a Roth IRA, which is always a good thing to have. They have income limits, of course, but a lot of people aren't really hitting those income limits for when you can't invest in your Roth IRA. So you invest in your Roth IRA. You go on Google, type in Fidelity, look at the Fidelity accounts that they have, open a Roth IRA, put in your social security number, whatever information you need. You have a Roth IRA now. Now you are on the platform, you have a Roth IRA. You have to fund that account. So in order to fund your account, you need to have a checking account. You need to connect your checking account or your savings account, however you want to invest, to your Roth IRA account. So you go wherever it says transfers or something like that. You put in your banking information and then you transfer a certain amount of money. How much money do you want to invest in your future? The recommended investment amount is 20%. We go by the 50-30-20 rule, which 50% goes to your needs, 30% goes to your wants, and 20% goes to your savings or, your investing. So we want to put 20% towards savings or investing. But before you start investing, we want to make sure you're out of debt. That should have been the first thing I talk about. if you're going to start investing into anything, you want to make sure you're out of debt. You want to make sure you don't have these credit card debts. You want to make sure you're out of debt, because these credit card debts are charging interest, 20, 30%. And the most you're going to get from the stock market is 10 to 12 average. So 20 is way higher than 10 to 12. So you're losing money by not paying off your credit cards. So before you do any of this, pay off your credit cards, put as much money to your credit cards, and save up some kind of emergency fund, maybe $1,000 or a month spending. We have the Fidelity account, we have the Roth IRA. We connected our bank account to our Roth IRA. We're gonna transfer 20%. Let's say you wanna cut that 20% in half. You might wanna invest 10% and save 10%. And let's say our 10% is $500. So you're gonna transfer $500 from your bank account, your checking account, to your Roth IRA account. Now that money has taken some time to get there. It's there now. Now that money is now able to trade. Just by sending money from your checking account to your Roth IRA does not mean that it's invested. I feel like a lot of people make that mistake. I made that mistake. It's basically like a savings account with 0% interest. It's just sitting there waiting for you to do something. So now we're going to actually trade this money. We're going to invest this money into maybe stocks or ETF, mutual funds. We're going to now invest this money into a fund that's hopefully going to grow 7 to 10 to 12% of our money. So we're going to invest our money into the S&P 500. The S&P 500 is a collection of the top 500 companies in the US. So in the S&P 500 is Nvidia, Facebook, Google, Meta? Meta is Facebook? Either or. Amazon, Tesla, all the big companies are in the S&P 500. So by investing into the S&P 500, you're investing into all of these companies at once. And you're not, picking which stock you want to go with. You're investing into the S&P 500. Now, Fidelity's S&P 500 is FXAIX. That's what I invest in. FXAIX. By investing into FXAIX, I'm investing into Amazon. I'm investing into Tesla. I'm investing in all of these companies just by investing $500 a month into FXAIX. So you want to click trade and you want to type in FXAIX. You're going to buy. It's the same market at the top. Buy. And then you could put buy shares or buy dollars. So it could be buy shares or buy dollars. We're going to put buy dollars. We'll make sure it's buy dollars. And you should have $500 into your Roth IRA. And you put in 500 into the keypad. You click trade or whatever it says. Okay. And then you should have a confirmation saying you put $500 into FXAIX or the S&P 500. And it's that simple. And then the biggest thing, the best way to build wealth is by automating your investing. So we're going to make sure that we find a place where you can do automatic transfers. I'm walking you through this whole thing, but you can look this up on Google. You can go on YouTube. You can ask ChatGPT how to automate your investments into Fidelity, and it's literally going to tell you how to do it. It's all about you wanting to do it. If you don't want to do it, then you're not going to take the effort to actually look it up. So what you're going to do is automate your investing. So you're going to make sure that $500 gets automatically taken from your checking account or from your savings account, wherever you have it. I prefer it coming from my savings account. 500 straight from your savings account to your Fidelity, and then 500 automatically invested into FXAIX or VOOs on Fidelity, which is the Vanguard's S&P 500 fund, or you can invest into, some stock that you really are supportive of or that you really believe in. The historical return on S&P 500 is about 7 to 10%, which is really good. And that's how you invest. It's super simple to invest. The hard part is to make the money to invest. The hard part is to save the money to invest. The hard part is to have that extra money so you can invest into your future. That's the hard part. But investing is easy. You open a Roth IRA, type in Google, open a Roth IRA, pull money from your checking account, connect your checking account, connect your savings account to your Roth IRA, pull money from your checking account into your Roth IRA, and in invest, trade into the S&P 500, you cannot go wrong. If you put your money into the S&P 500 for 10, 20, 30 years, you're going to come out on top. It's that easy. So stop waiting on investing. Stop waiting for the right moment. Stop waiting for the right amount of information. You have the information. The information is at your fingertips. All you have to do is press the button and start investing. So I hope you guys can take something from this video. And if it's anything that you're taking from this video, is to invest now. Stop waiting. The younger you are, the better. The hardest thing about investing is making the money to invest. Is having that extra income to invest. And the best way to have that extra income is by lowering your expenses, lowering your housing, lowering your food, lowering your transportation. Don't get a car loan, get a roommate, budget when you go to the grocery store, bring a list. It's really simple. So hope you guys enjoyed this video. Leave a comment. Let me know what you think about investing. Are you investing? Did this video make sense if you are a beginner investor? Hopefully it did, but I hope you guys see that this is super simple. So I'll see you guys in the next video.